Hello, everybody. My name is True Demon, and I am the Devil Stockbroker. Well, what can I say? The SPY really turned around on us. Just like the video said in yesterday, if you didn't catch it, SPY was throwing some signs that it was about ready to turn around and make a move to the upside. And sure enough, we filled this previous gap, both gaps actually. We had one gap here and another one here, and we have just filled that to the upside and formed a ascending triangle. So each of these latest moves pretty much confirms a bottom in the market, at least for now, which will bring us to a new lower high at some point in the future. Now, I've been tracking the volume in the market just to try to get an idea of where SPY might be going. And so far, near as I can tell, the biggest area where SPY has the least amount of resistance is up until this area. So right here, as the SPY starts to get comfortable around 383 is probably where the nearest top is, right between this yellow and dashed line. These two price levels between 380 and 382, 383 is about where all of the consolidation occurred in the third week of September, just before we had that big move to the downside that slammed the price all the way back down to around the high 370s back on Thursday. The market has effectively put in this new lower low, and it's very clear that we are now at the very least going to challenge this area of resistance here, and I expect that at some point the SPY will touch the top of this channel that it's been trading in for some time. Let's zoom out to the 1 hour chart and get a better look at this latest move to the downside. As you can see, the SPY has now had a big surge of momentum in the MACD, so we're due for some consolidation at some point, or at least for some calming of the price, but I think that it's still got another move in it for tomorrow and Thursday. So I'd anticipate the SPY at some point in the next 2 days to challenge 380 and then peter out a little bit after testing that resistance for the first time. The SPY is pretty red hot today. As you can see, the RSI has peaked at around the 70 level, so that's just toying with overbought. Even though I don't really trust the idea of overbought or oversold on the RSI, I do recognize that those are significant levels of resistance where we start looking for divergence on the RSI to indicate bearish patterns. But for the time being, it seems like the SPY has a lot of strength left in it, and I'm anticipating a quick, either a gap up or a slow grind, followed by a big pop at the end of the day tomorrow or early on Thursday, with the price peaking over 380 on one of those 2 days. Things to watch out for any kind of a rug pull. If you see weakness in the SPY, in that the MACD starts curling to the downside and the RSI puts in a lower high, like you start to see the RSI doing one of these numbers while the price is moving up, then that is a divergence to watch out for, where you see the price making a higher high while the RSI makes a lower high. And that would indicate more downside going into the following week. For right now, I think that the SPY is going to keep challenging new highs and breaking through resistance for the time being. The reason why I think that is because, as you can see based on the last couple weeks of trading, we had this big descending wedge that had formed over the course of the entire month of September. We very clearly broke that wedge on Monday, and now we've gapped up outside of that wedge. This wedge has completed, and we have confirmed that that was a successful pattern to trade. Now, the next question that we have to answer is, where can the SPY get to? What's the maximum ceiling? And I'm estimating that it's going to be somewhere around 410 as the absolute ceiling. There is this big gap between 400 and 415 that I have to at least recognize that this gap in volume does exist here. There was a lot of momentum whenever the price touched these levels, so it's possible, but I feel unlikely that the SPY will break up to this level. The more likely level for the SPY to reach is the 400 level at the maximum. My reasons for choosing this specific level is because we had this big consolidation. There was a structure that had formed here where there's a lot of volume traded in this area. So if the SPY can at any point in the rest of this month consolidate through and break into this level, that we will see more consolidation and begin to see divergences, with the SPY creating lower highs as well as the RSI creating lower highs and the MACD consolidating back towards the downside. So once we start to see that momentum shift, that's when we will resume shorting. But for right now, we're going to be long in the market at least to the 390 level. That is our first take profit zone, with 400 being the second take profit zone, and a very unlikely outside possibility of seeing the SPY return to 410 by the end of November. I think it's far more likely that we will see the SPY consolidate through the end of October with a big sell-off going into the first week of November, and then we will see yet another rally for the holidays as we go towards Thanksgiving and Christmas. That's a seasonal rally that we're watching for. We won't know what that looks like until, at the very least, we get till this zone at some point at the last week of October. Once we know what the chart looks like at that point, we will revisit that and come up with a new trading plan around that price action. Really quickly, I'm going to move back over to the housing market index. That's the XLRE, which, as you can see, has formed this very bullish flag that's now challenging a breakout. I am curious to see if XLRE can break out to this zone and retest 3750. If it is able to retest this area, then I anticipate that XLRE will resume trading somewhere around $38 between now and the next 3 weeks. This is a bit of a slow roller. XLRE had a huge move in the last 2 days alone, as the housing market is going into a seasonally strong period of trading. You see a lot of homes going out for their last few bids. You see a big surge of home sales towards this time of the year as people are scrambling to go get their house purchase out of the way before they go into the holidays, get their new homes locked in. Although we do anticipate that the housing market is going to continue crashing for the rest of next year, we do have to acknowledge that there will be these seasonal moves to the upside, and this is one of those. So rather than going long on XLRE, what I am doing is I am going short on DRV, which you can see this trade is already working out very well. I entered this trade at around $61. This was a short leg trade, just basically going short on DRV. If you're unfamiliar with DRV, this is just a leveraged ETF that is 3 times the opposite of XLRE. So whatever XLRE does, DRV does 3 times the opposite. XLRE goes up 1%, DRV is going to go down 3%. And that is how I'm trading this. Now, I entered into this short position after I had received confirmation that we broke down on this bear flag right on this candle exactly. This was a beautiful entry. We had a nice retest candle immediately after, and then we saw the sell-off going into the late afternoon session today. So I'm currently up $400 on this. This is a 5.7 risk to reward ratio. So whatever I've placed on this trade is essentially a 5-to-1 risk reward ratio. If you can get in early tomorrow, then this may still be an opportunity to at least take a 3-to-1 risk to reward ratio, provided that XLRE doesn't rip first thing in the morning. We may see a little bit of a retracement in XLRE, which would look like just a little bump up in DRV. If you can get an entry on a short position there, then that would be a excellent entry. There's still a little bit of time left above $61. So if the price does touch 61, that's a good time to get in on a short position if you're interested in trading this. Full disclosure, this is just a paper trade, so keep that in mind, but I do have a short position in the form of put options against DRV that I'm also trading in my actual portfolio. I got into those the day before on October the 3rd, and those are also doing very well right now. I want to catch up on the HYG signal, which this actually would have given you a hint that today was coming. HYG had traded this bull flag and saw a little bit of retracement, but in the early morning session, we saw HYG shot up immediately going into the morning, and SPY was doing this as well. But all throughout the day, HYG was forming this parabolic arc pattern. You can see the parabolic arc. It's a rare pattern that shows up in only a few instances, but this is one of those cases where you can see it forming what it looks like a bull flag, but this characteristic S pattern where it moves up and down in perfect symmetry was a big indicator that the SPY was going to rip at the end of the day today. So HYG broke its bull flag a full 15 minutes ahead of the SPY. So this would have given you a hint to jump into some long positions on the SPY early this afternoon before the actual move started to take place. And what this is telling us is that we're getting continuous moves to the upside in the junk bonds market, and we're seeing some more consolidation in after hours. I'm anticipating another move to the upside first thing in the morning. So the move is already starting to happen. It may already be too late to get a decent entry, so don't try to force your trades if you're on the fence and you're not sure. If there's too much risk for you on this latest move, then don't try to day trade the move. Rather, look for some pullback and then find a nice swinging entry to get to that next price level. And you can use HYG to give you a little bit of lead time, up to about 15 minutes of lead time before the SPY makes its move that follows it. So just keep that in mind. If HYG and SPY are moving together, then everything's kosher and the market's behaving normally. As soon as you see them moving away from each other, or you see the HYG shoot up all of a sudden and the SPY is still lagging, then that is a buy signal. If you see HYG shoot to the downside while SPY is going sideways or up, then that tells you the SPY is going to retrace, and you need to either take profit or consider entering into a short position for that near-term price movement. A little bit more on the indices. We've got the IWM, the Russell 2000, which is moving up very nicely, again forming a clear bull flag, actually a bullish pennant on IWM right here. We are beginning to test the upper edge of this in after hour, or the lower the lower side of this ascending triangle on IWM. But as you can see, this is part of a much larger bull flag, and if we get that nice little price pop of $176 on IWM, then we're likely to see some nice movement in other meme stocks like AMC, GameStop, and other small cap tickers, including BBIG. Take note that the VIX has retraced as well, so the market is moving into a risk-on environment. So if you needed additional confluences to convince you that the market is turning around and looking more bullish, this was basically it. Now, we do have some harmonics in the VIX. I don't pay too much attention to those because the VIX is really volatile. It makes these patterns all the time, and they break repeatedly. So if you're using this harmonics indicator from my other charts, just bear that in mind, that that is not as reliable as it is in the main market. Keep in mind that the Qs in the tech sector are going to see probably the largest gains out of this new move, since the risk-on sectors in tech, finance, and electronic technologies and semiconductors are all consolidated into the Qs. So if we get another move in the SPY tomorrow, you're likely to see that the Qs are going to far exceed those moves. The bull flag is still forming on the Qs, so if we get a nice pop in Apple and some of the other tech sector tickers, then you'll see the Qs move pretty strongly. I do not currently have a position in the Qs. I actually got stopped out of my trade right here. I left a little short leg here in the Qs that got stopped pretty quickly. So unfortunately didn't take any profit on that, but I still got out for almost no loss really. So not a huge deal. I'm looking forward to playing the Qs in the tech sector up to the top of its channel right around 315. We may not get quite there, but I can see that we've got some consolidation at various price levels between 300 and 290. So I'll be looking to trade at least to this level where I will take some profit and then ignore the chop until I see either a breakout or a breakdown in the tech sector for the retracement move or the correction that tends to occur in mid-October. I'll recap a couple more tickers before we close out for the day. So we have Apple in front of us, which is also doing a characteristic bull flag, and it did cross above its 50-period moving average. It's very close, very tight, but if you look very closely here, you can see that this candle closed just above the 50-period moving average on Apple's 1-hour candle chart. So this is a very bullish development for Apple, and this bull flag is clearly broken now. So what we would expect to see is for Apple to move up to the next ceiling of this channel, consolidate in this area before breaking out and challenging the next price levels in this zone. It's possible that Apple has enough strength and momentum to clear this channel entirely, but I kind of anticipate it moving in stages. The RSI moved up very quickly, very steep movement on the relative strength index. So I'm guessing that if it does manage to make another move to the top of this channel, the RSI is going to need to cool off for a while before Apple can make another move. Amazon also made a very strong move, but kind of petered out at the end of the day. This is actually looking like the best trade for me right now going into tomorrow. We had this consolidation in Amazon at the bottom of this bull flag, and we haven't seen it move after hours. It's actually retraced a little bit further. So if we get Amazon showing that it's still consolidating right here at around $121, then this may be a good long opportunity to see Amazon test its 200-period moving average, at which point I kind of anticipate Amazon to finally let go. Since we do have this harmonic pattern, this is a bearish Navarro star pattern, and this is a harmonic pattern that tends to play out pretty accurately in the market. So keep a close eye on these harmonics. There are strong indications that Amazon may retrace very quickly in the near term. However, looking at the long term, there's a much larger harmonic pattern here in the form of a Nen star. I don't trade this one as often, but it is calling for a price target at 136, which would bring us back to the mid-September rally high at $136. So keep that in mind. If we do get that breakout on Amazon, that could be a really nice trade. Netflix is still consolidating at the moment on a bull flag. This is a very large flag that's been forming over the course of several days now, and we are testing the highs. So if Netflix does manage to break out here, I'm anticipating it to fill this gap, and this is a very large gap for Netflix to fill. So I'll be looking to take a position in this first thing in the morning. We've got several confluences in our favor. We have bullish divergence at the bottom that called this move, this impulse move here from $221 up to $245. So that was a very large move in just a couple of days. The crossover on the MACD was very strong, and now we've consolidated back to around the middle, and the MACD is threatening to cross. If you look very closely, we are now getting a MACD cross on Netflix. So these are the three tickers that I will be watching for a quick move tomorrow, and these scalps are very much in my sights. Tesla, on the other hand, is one that I'm going to stay out of. Tesla is actually looking pretty volatile and dangerous. It may be forming higher lows here and looking to cross over on the MACD, but unfortunately the news with Tesla being forced to acquire Twitter is putting a lot of pressure on the stock. We had a huge red candle that shot it to the downside, and I'm not sure how the market will react to that move to the downside. Honestly, I see Tesla acquiring Twitter as net bullish for the company, since it was honestly one thing that Elon had wanted that he's backed out of. At the end of the day, I think that this is a second arm of Tesla's business that can work to their favor, but the market's just not liking that it's being forced on Elon and the Tesla management team. So it's not coming at a good time, and it's not coming favorably to their company. So I'll still watch Tesla closely, but at the moment it is looking very bearish, and we're starting to see a bear flag playing out on Tesla's stock. So we'll see how the market reacts over the next 48 hours. But for right now, I'm just kind of staying neutral on Tesla. And the final ticker that I'm going to cover that's attached to the SPY, NVIDIA, part of the semiconductors industry, is performing very nicely, and we see that it did form this bull flag here in the last 24 hours. The MACD is showing strong momentum to the upside already. However, the ideal entry for the trade is already since passed us by. So now we're getting into this consolidation zone where most people should be looking to take profits on NVIDIA. This already had a very strong move, as opposed to AMD, which is actually not responding as strongly as the rest of the semiconductors market. It had a bull flag that is now still consolidating at the support levels, and this is actually the one that I'll be looking to trade for a long position going into tomorrow's trading session. So currently no positions in AMD, but after watching the MACD, if I see a rejection here instead of a crossover, then I will take the advantage of that move and trade AMD on a MACD rejection to the upside, where the MACD starts moving like so. That's going to conclude today's video. Thank you guys so much for watching and for tuning in. If you like this kind of content, please be sure to leave a like on your way out. Subscribe to the channel if this is your first time with us so that you can get updates on every time we release a new video with critical market information. And if you are new to Hell's Trading Floor altogether, please consider joining our Discord at discord.gg/hellstradingfloor and signing up through our website at hellstradingfloor.com. Thanks again for watching, and I'll see you guys next time. Until then, have a hell of a time in the markets.